Welcome back, everybody. Hope you're having a fantastic Monday. Crypto is pumping yet again, especially ETH. But can you trust this bounce? Should you sell your bags now or start loading up? If you're feeling confused, shaken out, or wondering, what the heck is crypto going to do next? You guys aren't alone. Every year, this is a stretch that wrecks most investors. Group chats get toxic, timelines full of panic, and everyone's asking, is this bull market over? But I know you guys aren't, but like other people are. I've seen this scenario play out every single cycle, and it spooks investors into selling at the worst possible time. But that's not gonna happen to you guys, because if you stick with me, I'm about to show you the signals that separate panic from opportunity and how the biggest money is getting positioned right now for guys, what is coming next. First, let's talk about why August always feels like a trap. This is the part of the year where confusion goes rampant with people not knowing if they should sell everything or buy the dip. And when you study the data, this isn't new. What you're seeing right here, this is the Season chart. It lays out in black and white. August and September are almost always the toughest months for Bitcoin and Ethereum. If you look at the big seasonality chart at the top, it shows how Bitcoin average returns move through the year. When the lines are flat or heading down, those are dead zones for price action. And guess what? On average, August and September show up as that long, flat stretch where momentum disappears. The market chops sideways and down, and people get faked out the most. But if you're able to hold on, and you guys are, until Q4, this also turns out to be the worst time to sell, as that generally is when the market finally picks up. You can see it on the volatility charts too. Summers are when Bitcoin's volatility hits yearly lows. And that's usually where altcoins quietly put in their bottoms. Most retail traders get so focused on the daily headlines and daily price charts that they forget that this pattern is as old as crypto cycles themselves. They spook people out from their positions and then send it higher once they've given up. Take a look at this chart. 8 out of the last 12 Augusts have ended in red for Bitcoin. But here's where it gets interesting. And we touched on this last week. Not every August is created equal. An August during a bear market is completely different from an August in a post-halving year. The numbers prove it, guys. 2013, 2017, 2021, all strong post-halving bull years, all finishing in the green. Now, that doesn't mean it's guaranteed to happen, right? But you know how the saying goes, history doesn't repeat, it rhymes. And if that's true, August is only getting started, but only time will tell. But this year, there's a new twist, guys. We're no longer just dealing with a typical seasonal chop of the crypto markets. Now we have all of these new regulations coming into play, institutions absolutely piling in, ETFs loading up, geopolitics and trade wars going wild, and the Fed chair taking a firm stance against the president. And you guys know me, how I play these summers. My entire crypto career has always been just to hold and chill, right? Because time to time these things is really, really difficult. Although over the weekend, I thought about putting a leverage long in. I didn't though, because, well, you just never know. And I just don't think that there's a lot of room for me, who's not an expert trader, to be gambling around too much. But I did have a feeling that we were going to go higher today, and we are. And Ethereum is pumping right now. Right? And we're really, really happy that we just made that sizable position move into Ethereum a couple months ago. And if you guys were with me, then congratulations on that move, because it's proving that was the exact right time to pivot. So far, August headlines have made even the strongest hands sweat. I mean, there's new institutions in here too that are sweating as well. You guys are even more experienced than a lot of the new people in crypto, that's for sure. On Friday, August 1st, spot Bitcoin ETFs saw $812 million in net outflows. It was the second largest exits in ETF history since they launched. Ethereum wasn't spared either. It ended its 12-day winning streak with $152 million of outflows. And it just goes to show you that even Wall Street can get spooked just as much as retail. On social media, it became the perfect storm. Panic from retail saying, I told you so. Trump sending the nuclear war over, the nuclear subs over there. Analysts predicting a complete breakdown. I mean, it was just chaos. This is amateur hour, guys. We know better. I mean, this wasn't even a big pullback, right? We're used to seeing 20, 30, 40% bullbacks in bull markets. And this was just a little dip and people were getting worried. But you guys know, if you're watching the channel, We had nothing to worry about. And I made that explicitly clear on Friday. And if you guys really pay attention, you can see a whole different story playing out. In July and early August, public digital asset treasury companies raised $13 billion in like a little over a month to buy Bitcoin and Ethereum directly on their balance sheets. Ethereum led that charge with nearly $9, and now, as you'll see later, almost $10 billion in new buys for digital asset treasuries and ETFs. Our crypto markets are finally starting to mature. And even though price action still gets choppy and boring, we're not seeing those massive dumps that used to wreck everyone in past cycles. Just look at what happened the last couple of weeks, guys. So you had Satoshi era whale who market sold in one order, $9 billion worth of Bitcoin, 80,000 Bitcoin. And that was just eaten up like that, right? And July actually closed up 8% for the month, despite all of that. So where are we now in these kind of bullback scenarios? I mean, look, we could always have black swans, right? Let's say that Trump's submarine actually fired a nuke into Putin. Would the markets get very worried? Yes, they would pull back. It would be bloody. And that's why we need to be very careful with leverage. But fundamentally, these geopolitical things like tariffs, wars, all this other stuff, those are only short-term knee-jerk reactions to price. We look at the other underlying stronger fundamental driving factors like global M2 supply, money printing, federal deficit spending, fiscal policy, these kind of things that truly shape the future of our markets. Everything else is just short-term noise. Now let's shift our gears over to what's happening with the Fed, because let's face it, guys, our markets have just been feeling like this over the past few days.
We're going to win so much, you may even get tired of winning, and you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more. We're going to win more. We're going to win.
For months, the official jobs report made it look like the US economy was strong. Numbers kept coming in higher than expected. And that gave Powell all the cover he needed to keep rates unchanged. Heading into the last FOMC, everyone thought a September rate cut was basically a sure thing. But then Powell took the stage and poured cold water on the whole market, and suddenly the odds of a rate cut in September dropped below 50%. Way to rain on our parade, Powell. Then came the reality check. All those strong job numbers got quietly revised way down. May and June slashed by a combined 258,000 jobs. July missed expectations badly with just 73,000 new jobs. And now unemployment is at its highest since 2021. As the real data hit, rate cut odds for September spiked back to 80%. How the heck could the jobs data be off by so much? Well, Trump went on camera saying he fired the Commissioner of Labor Statistics and accused her of manipulating the jobs data. Just listen to this.
Well, it's a Biden appointee, and we've had problems in the past, and we had problems even before the election. You remember those wonderful results that were put out just before the election, and everybody said, where do they come from? Then I think they adjusted it after the election, and we had some difficulties with her, and there have been a lot of questions, and we fired her because we didn't believe the numbers today.
Because it doesn't matter what the reason was, right? Was the Fed and this other person rigging the system to make it look, it doesn't matter. And now you have Trump coming out saying that this is BS. It doesn't matter. Maybe Trump's playing 4D chess. Maybe he's bluffing. Maybe this is inside. Who knows? It doesn't matter. What matters to me, we got the data that we needed to give the Fed potentially the green light to bring our rates down in September, in 1 month from now, 5-6 weeks. And when that happens, guys, welcome to Valhalla. And on top of that, Trump's about to pick a new Fed governor. And there's rumors about him installing a new shadow chair to push his policy agenda. So here's why this all matters, guys. Powell and the Fed are making massive decisions based on inaccurate data. If the Fed ends up cutting rates soon, it's because things are a lot shakier than everyone wanted to admit. And more capital looks for a way out, straight into digital assets like Bitcoin and Ethereum, because these are the assets that can't quietly be revised or manipulated behind closed doors. Well, all this drama is playing out at the Fed. Regulators are sprinting toward making America the crypto capital of the world. Today, the CFTC just launched its Crypto Sprint initiative, officially putting President Trump's digital asset roadmap into action. Acting Chair Caroline Pham made it clear the CFTC is working hand in hand with the SEC to push Project Crypto and bring the entire US financial system on chain. America's regulators are now under pressure to nail down the rules for self-custody, spot markets, crypto banking, and stablecoins right away. Guys, if you have not seen this speech by Paul Atkins, I don't know if it's because I'm a builder and this means a lot to me and what we're doing with Commonwealth and Paid Network and crowdfunding and trying to break down those walls from the 1% to the 99%, open up crowdfunding, open up opportunities for you guys to get in, just like all the other VCs. I mean, this was like a big part of this speech. It's not in this clip I'm about to show you, but I do suggest if you guys have the time to go watch this speech, all you got to do is put in Paul Atkins speech, right? And it's on the SEC's actual YouTube channel. But just check out this 1-minute clip.
Today, I should like to discuss what Commissioner Peirce, Hester Peirce, and I are calling Project Crypto, which will be the SEC's North Star in aiding President Trump in his historic efforts to make America the crypto capital of the world. The SEC will not stand idly by and watch innovations develop overseas while our capital markets remain stagnant. We're at the threshold of a new era in the history of our markets. As I mentioned earlier, today I'm announcing the launch of Project Crypto, a commission-wide initiative to modernize the securities rules and regulations to enable America's financial markets to move on-chain. The President's Working Group on Digital Asset Markets released the PWG report with clear recommendations for the SEC and other federal agencies to build a framework to maintain.
You guys get the point, but not really. I highly suggest you go watch that. It is incredibly bullish. I mean, the whole thing was unbelievable, right? I mean, we've got a lot of this kind of foresight coming from the different kinds of rules and regulations, but we didn't really know. I mean, Paul Atkins had said a few things before, but we didn't really know the stance of the SEC. And even though in the beginning he comes out and says, these are views of my own and not necessarily represented by the SEC. I mean, he's the chair of the SEC. So he's the guy, the big dog, makes all the big decisions, right? So it was incredibly bullish. And you no longer have the SEC and the CFTC fighting over who controls the crypto space. They're working together under the Trump administration, who made the executive order for them to get their stuff together. All right, let's zoom out and talk about what's happening at the top of the capital pyramid. July has become the month of digital asset treasuries. Public companies selling stock, raising hundreds of millions and in some cases billions of dollars, and immediately turning around to buy crypto for their balance sheets. As I mentioned earlier, in June and July alone, more than $13 billion in public money was deployed in Bitcoin and ETH through these treasuries and ETFs. According to the latest data, there are now 29 public companies holding over $100 million in Bitcoin. It's wild. These treasury companies have now become the marginal buyers of ETH and BTC. When they're out there raising money and buying, you can feel it in the price action almost right away. If you want an edge, keep your eyes glued to the pace of new treasury announcements and the flow of fresh capital into these treasuries. It's happening at a pace obviously never seen before because it just never happened before, but it's just only accelerating. It's crazy. And of course, with all of these large treasury purchases, that's getting some of the most seasoned investors to spit out some ridiculous numbers. Check this out. Even Chamath Palihapitiya publicly said that he could see Bitcoin hitting $1.14 million this cycle. And Tom Lee came out with an even crazier prediction for Ethereum, hitting $60,000 this cycle. I mean, I hope those numbers are true, right? How will you guys feel? Let me know in the comments below if those numbers get hit. I mean, these are not numbers that people just throw out lightly, but they're paying attention, making an analysis, and they're managing billions of dollars of capital. And these are their public predictions. Let's shift gears though, guys, and talk about alts for a little bit, because I still think, and that's why I've been very conservative so far going forward, that right now is the best time to still be in Bitcoin and Ethereum, because we haven't seen Bitcoin dominance drop dramatically. It is dropping. And especially today, you have Bitcoin up a few, not even 1% or 1 point something percent, and Ethereum up nearly 6% today. That tells you the alt season is coming. So it's important to talk about it. But we have the alt season index right now. It's just at 45. So we're still a long way away from that phase of rampant speculation, and Bitcoin dominance has been trying to push up, like I just said, but it just hasn't quite got there yet. So I'm still mostly in them, but I've called, I've told you guys in my private Telegram group, I've made like 3 calls now over the past month or something like that. I've had some retracements. Of course, the whole market retraced. I still think those are good and interesting buys. But again, I told everyone in those groups, just to do, I'm doing small positions in these things right now because it's just not alt season yet. And I'd rather be a little late to the party than way too early because we just don't know what kind of wild stuff can be happening here for Bitcoin and Ethereum. I mean, the Ethereum treasuries are just starting to kick off. You've got some major buys coming in from SharpLink and Bitmine into Ethereum, and Bitcoin treasuries are starting to happen all over the world. And who knows how long these 2 majors might continue to push up the market cap of crypto for a while before we see a serious rotation in alts. We just don't even have retail back yet. Most retail buyers, which are the ones who push all the micro caps and the small caps up, they're still not here, which is crazy. This healthy, slow, sustainable growth has come from mostly institutions and super rich people. And when it comes down to ETH, guys, in ETH treasuries, Tom Lee from Bitmine, he's the one to watch right now. They're setting the pace for institutional Ethereum buying. Their stock BMNR now holds over 833,000 ETH, valued at around $3 billion. That makes it the largest Ethereum treasury in the world, around the 3rd largest crypto treasury overall. And this is happening in Ethereum. And this is why the interview I had with James and Matt was so good, because it gave us some perspective. Even though we've talked about the other ETFs coming in, SUI, Solana, XRP, blah, 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 the bid for Ethereum and Bitcoin are just going to be so much stronger than all the other ones combined. I mean, just recently, Bitmine acquired another 208,000 ETH, valued at about $757 million to their stash. And the reason, guys, is because the reason that I'm not going super crazy in alts yet is because, again, we're just not there yet. Solana has been struggling to break that $200 resistance, right? And ETH has been struggling to break that $4,000 resistance. Once these resistance levels are broke, it's like a psychological layer, right? And we have to break those things in order to send the alts much, much higher, right? Bitcoin to Ethereum, we're seeing that happening now. Then from Ethereum into major caps, right? Like Solana, BNB, XRP, SUI, etc. Every cycle, crypto shakes out the most people at the exact point of maximum opportunity. If you're calling the top before the Fed even cuts rates, you're almost guaranteed to be left behind. This is the classic shakeout psychology. When things get really volatile, most people either panic sell near the lows or they get wiped out because they're using too much leverage trying to catch the bounce, guys. That's why I'm always watching for signs of blind bullish faith or extreme excitement. I get it. If you guys watch my channel, you know I'm usually super bullish. That's why I just got this bull. Check it out. That's the Wall Street bull, right? Just always bullish. And I am always bullish, right? But we need to just be, strategic about the way that we maneuver these things. And even though Bitcoin and Ethereum are going up today, do I think that it's clear up only from here? No. We could come back and Bitcoin could easily hit, there's another resistance level at about $110,000 that it could hit, right? And if that happens, you guys, again, I'm not worried at all because there's just too much momentum behind us right now, too many tailwinds. But what we don't want to do is we don't want to round trip our bags, guys. So we're going to be very, very careful. In fact, over here, right here, I have a huge TV. And I'm going to put it behind me in this space over here, right? And over here, yeah, over here. And I'm going to have up there mostly, I'm going to have up all the indicators of the bull market cycle tops so that we have a daily reminder to keep an eye on those things, because right now it's obvious. But when the market is really ripping, it's going to seem like it's never going to end. And you might forget to look at these important indicators, which in that case is so easy to miss the top and round trip your entire bag. Go from broke to rich to broke again. And we don't want to do that. So we're going to put a daily reminder to look at every single day. Maybe you guys should do the same. When I do get this up and I show you the background, I'll give you guys a link to follow along as well. And before I really get into why I think there's some really good times ahead, guys, just a quick word from our amazing channel sponsors today. Imagine this. Bitcoin hits $1 million. Solana smashes through 1,200. And SUI skyrockets to $100. Now, imagine the tax bill when you finally cash out. Yeah, guys, that hurts. Uncle Sam's going to crush you on it. But what if you could stack all that upside tax-free? With Bitcoin IRA, you can. It's the retirement account built for crypto believers. Zero boring paperwork, zero mutual funds, and all the upside of Bitcoin and your favorite altcoins growing in a tax-advantaged manner. Rolling over your old IRA or 401k just takes a few clicks. Over 200,000 people are already using it, so your future doesn't get left behind. If you want to keep more of your gains and let your coins work for you and not the tax man, get started today, guys. Click the link below. Let them know Kyle sent you, and you can earn up to $1,000 in rewards. And you ever felt crypto rich, but your bank account telling you guys a different story? That's me for ages and still me right now. My portfolio looks great, but when it comes time to pay for dinner or groceries or coffee or flight, whatever, moving money around was always a hassle. Then I found Xapo. With Xapo card, I can load up with Bitcoin or stable coins and send them anywhere. Plus, it comes with a premium feeling black card so you can feel like a baller. No need to sell my crypto, no complicated transfers, just tap, pay, done. Anywhere Visa, MasterCard's accepted. High limits, real exchange rates, and up to 1% Bitcoin cash back. That is huge. And even daily interest on my cash. I can put cash in there, load it up, and I earn interest on it. Better than a bank account. Suddenly, my digital wealth feels a lot more real. Plus, if you guys sign up with my referral link and become a member, you can save $500. And yes, the card does cost $1,000. You save $500 with my account, so it's only $500, but you save, it's better than every other card on exchange rates, so you end up saving that if you use the card frequently. So guys, hit the link in the description below, get your Xapo card, and unlock your crypto for real life use today. All right, guys, and now back to the show. Now, this is the part that should excite all of us. The data shows it. August and September are almost always built for chop and shakeouts, but the final quarter flips a switch and brings the biggest moves of all the cycle. 8 out of the 12 last Q4s have closed in the green, with the most explosive runs happening in post-halving years, like this year. The best traders and funds, they know this, so they use the late summer to accumulate and get positioned, while retail gets fudded out of their bags. You're seeing this now on chain too. Every time there's a major profit-taking wave or shakeout, like we just had in July, Bitcoin and Ethereum typically spend the next couple months consolidating and building up a base before the next leg up. I think personally the next price target's around $150, and I think that we're going to get there by October. And then I think we're going to go probably even more parabolic to hit around $200,000 by the end of the year or December or something like that. All right? It seems pretty crazy, but I think that's the trajectory that we're on. Now, we're going to be paying close attention if the curve goes like from like this linear to start going more parabolic. That's when we really need to pay attention, right? Because remember, we showed you that pi cycle top indicator in the video last week. And as long as the price continues to go up linearly and slowly, you're not going to get, you're going to continue to see the moving averages, the 111, 350 moving averages move kind of parallel to each other. But as soon as the 111 day starts to go up, that's going to hit closer. And as soon as that line crosses the pi cycle top, that's when we want to pay really close attention and probably take a lot of profits at that point. Because historically, it's been super accurate at calling the top every other time before. And guys, here's the bottom line. This August early shakeout was exactly what smart money has been waiting for. They've been waiting to pile back in. They got a discount. They were able to buy in at $112,000. Crypto is no longer just a retail speculation game. We got public companies, treasuries, ETFs, and deep-pocketed allocators who are calling the shots. And their moves are shaping every chart you see. Your advantage now comes from staying disciplined and tracking the flows that matter and watching this channel as we continue to dive into the research to show us exactly how to be playing this market. We need to pay attention to real liquidity coming in or slowing down, stablecoins coming in and out, stablecoin market cap going up or down. If you're still DCAing in, these shakeouts are the best time to DCA in. Guys, if this episode helped you see the game more clearly, share it with a friend, someone you care about, someone who you want to give a wake-up call to. And if you're new to the channel, welcome. My name is Kyle Chasse. Make sure you hit that subscribe button because my goal here is to keep you ahead of everyone else while we're heading into this amazing super cycle. And if you want even more reasons why I'm not worried about this price action and why I think we're headed higher, try watching this show, guys. And remember, as always, guys, stay sharp, continue to stack your Satoshis and maybe some ETH, and I'll catch you on the next one. See ya.